This video is made for entertainment purposes only. Please invest your money at your own risk. I am not a financial advisor. This video is not financial advice. This video is made for educational purposes only. What is up, everyone? This is Safe Investor AG, hbar Sim Chelsea Warrior, and today I'd like to present to you how the Feds manipulate the market. So let's get to it. I just want to point out something real quick, that the entire crypto market is red. Look, XRP is down 17%, Dogecoin is down 16%, Solana is down 12%, Polygon, everything except, you guessed it, my all-time favorite, hbar, is up 13%. Keep that in mind. Anyways, I want to show you two videos that pretty much sum it up. Going off of BlackRock, they want to start a spot ETF. Okay, Coinbase is going to be hooking them up. Okay, so let's get started. So I want to give credit to Library of Wealth for this video, and we're going to listen to Michael Saylor, what the spot ETF means, and why Bitcoin is going to just explode. And then we're going to listen to Clear Value Tax. Okay, he's a CPA, gives us his outlook on the entire market and economic status of the country and of the world, mainly the country of USA. So remember this. I'm going to leave the link of the videos down below. So let's watch the first one.
Most of them have been doing business with the same investment company for 40 years. So you're talking about a publicly traded company, Apple, Amazon, Microsoft, Google. They've got relationships since they were founded, and they could buy $1 billion of Bitcoin in a minute, no money down, on a phone call. And no one would say a second thought if it comes through a spot ETF.
If it comes through a spot ETF.
But if they were to say, I want to buy $1 billion of Bitcoin, the commodity, they would need to have 16 board meetings, 100 lawyers and accountants review it. They would have to go through all sorts of contortions, 1,000 pages of operating procedures. There would be endless debate, and they would have to come up with $1 billion of cash. So the difference between Bitcoin and the spot ETF is profound for the institution.
Okay, if you have any questions, please comment down below. And if you want to watch the video, I'll leave the link on the description, by the way. Again, just repeating myself.
Welcome back to Library of Wealth. Today we have Michael Saylor discussing the upcoming price action and optimism for a significant bull run in the Bitcoin market very soon. Saylor's optimism is grounded in the upcoming halving event in April and the upcoming approval of a Bitcoin spot ETF by the US Securities and Exchange Commission. The SEC is presently evaluating various applications, with its main proponent being BlackRock. With BlackRock's substantial influence, there is growing confidence that at least one spot Bitcoin ETF will receive approval in the very near future. This would be a monumental achievement for the Bitcoin community, something many have anticipated for over a decade. Securing approval would be transformative for the cryptocurrency world. It would pave the way for substantial institutional investment, attracting sovereign wealth funds, major corporations, and even governments. Saylor believes this will open the door for massive companies to hold cryptocurrencies on their balance sheets. Let's get right into the latest interview with Michael Saylor, as he discusses how Bitcoin is a game changer in 2023 and what changes we can expect in crypto very soon. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Approval or endorsement of a regulated crypto exchange by the SEC, if they recognize an exchange or certify or endorse one, that'll be a fourth big milestone. Any kind of other guidance, constructive guidance issued by the regulators out of DC would be a fifth big milestone. So I think those are all the major milestones we can look forward to.
What are your thoughts on the macro picture and its impact on Bitcoin?
I think that the most important place to start is to recognize that every conventional economic metric that is talked about in mainstream media or in mainstream political conversations is a man-made, fabricated metric. It's just a synthesized metric that is created, named, and defined and measured by an interested organization that has a vested interest in creating a certain effect. All the labor statistics, all the monetary statistics, all the inflation statistics, all of these things, the definition, like, will we have a soft landing? Well, of course we'll have a soft landing because it's politically advantageous to have a soft landing. So how do you create a soft landing? You simply define a measure of the economy that you know will land softly, and then you go and you track that and you report that. And there are parts of the economy that had a hard landing, but we simply don't report that. I guess what I'm trying to say here is there's a lot of conventional debate in the macroeconomic sphere about conventional synthesized metrics, and the GDP results don't track the economy. The inflation results don't track the price of stuff. The rate of change, sector to sector doesn't necessarily track what you think it tracks, because the people that create the metrics have too much flexibility with regard to what they choose to measure and how they choose to measure it. There's an old saying in the propaganda business, you can't tell people what to think, but we can tell them what to think about. They don't address the elephant in the room, like the fact that, 40% of the people aren't working. Should they be? Not is the unemployment rate moved from 3.1 to 3.2 or from 3.1 to 3.0. That's irrelevant. So, I think that we will always manage these things so as to kick the can down the road and avoid acknowledging anything that's terribly disturbing in the near-term time frame.
What is your advice to that average family who doesn't have savings and lives paycheck to paycheck?
Well, my number one advice is just dollar cost average into Bitcoin. And if you have money that you don't need for the next 4 years, that money you sweep into a Bitcoin investment. Bitcoin's the apex property, and then you let time work for you. The longer amount of time you have, then the better off you'll be. I generally think, Bitcoin is the apex property. The conventional mediocre properties are either high quality real estate or high quality stocks, the S&P index. If you wanted any other idea, like today, I would hold extremely highly desirable real estate that everybody's going to want, or unregulated monopolies that are big tech, unregulated digital monopolies. But both of those are inferior to Bitcoin by a lot. So if you want a diversification, you hold unregulated digital monopolies, and you hold extremely luxurious, desirable, prestigious real estate. And everything else is probably going to be a loser, holding cash, holding bonds, holding any other run-of-the-mill stock or whatever. It's just the world is too risky. And in terms of how you accumulate wealth, it's, you have to work pretty hard at something, whatever it is. You have to be good as a doctor or a dentist or IT professional or whatever. You have to do something to generate cash flow. And then you look to acquire the apex property using your cash flows or using equity or using debt, intelligent debt.
Saylor challenges the conventional macroeconomic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures, which are selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Saylor also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. What do you think about the latest interview with Michael Saylor? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing? Comment down below. Thanks so much for watching. Don't forget to hit the like.
So there you go. Now we're gonna watch clear value tax.
When it comes to the stock market, please let me know your opinion. Do you think that stocks are heading up or down? So I want to tell you this. There are a lot of warning signs that the stock market is going down, and I want to share these with you. And then I'm going to give you both sides of the argument. I'm going to give you the bull case as well as the bear case. So let's get started. So let's begin with corporate earnings. About 90% of companies on the S&P 500 have now reported their second quarter earnings, and the results were bad. They were actually very bad. Corporate profits are down 5% compared to last year. So this was the worst performance since 2020. And corporate profits have now fallen for 3 quarters in a row. But the funny thing is that you would never suspect this. You would never suspect that corporate profits are falling if you just read the headlines. That's because nobody wants to come out on mainstream media and nobody wants to tell the truth that corporate profits have been falling for 9 months. Currently, we are in an environment where everybody gets a trophy. In this earnings season, 80% of companies have beat analyst expectations. So just think about that, 80%. And I'm not kidding you. You've probably seen this for yourself. You see a company report that their sales are down, their profits are down, but they beat analyst expectations. But I already warned you at the start of earnings season, if you remember. And you understand what's happening. You understand that the analysts are setting their expectations just ridiculously low. And they do it on purpose. So personally, if I was in charge, I would fire all those analysts, because how do you undershoot 80% of the time? But I'm not naive, and you probably aren't too. You understand how the game is being, you understand the game, and you understand that there's a game being played, and it's a really stupid game.
So I just got out of the shower. That's where I come up with the best ideas. You could probably relate. And that's exactly where
But you know what? I'll tell you this. These analysts, with their phony estimates, they're no longer tricking people. Just take a look at this. This is how stocks have been reacting after a company reports their earnings and beats expectations. So this is over the past 5 years, and this is by quarter. So take a look at this quarter. 80% of companies are beating expectations, and the average reaction is the stock goes down. And they're going down harder than usual. So maybe it's because people have caught on that these analyst expectations are phony. So I want to send a message to Wall Street and to financial analysts. I just want to tell you that we're onto your game. We understand what you're doing. We know what you're doing. You're setting the bar extremely low so that 75 to 80% of companies can beat expectations.
They'll still do it.
And we're onto your game, and you have to cut this out because this is just ridiculous. So I'm personally trying to alert and educate people about the games of Wall Street and mainstream media.
They're not going to stop.
We don't appreciate the manipulation and the fake news. So I want to tell you, do not be fooled by the headlines, because corporate profits are sinking. So when you read the headlines, Apple beats expectations. If you read past the headlines, the truth is hidden in plain sight. You'll see that sales are down, profits are down, but they still beat analyst expectations. Okay, now I want to give you the back and forth argument between the bulls and the bears. So the bulls are saying that stocks will be going up, and bears, they're saying that stocks will be going down. The bulls are saying, okay, corporate profits are going down, but we have gotten past the worst of it. The bulls are saying that it's just better times ahead, and that is actually the consensus forecast. So the consensus forecast is that Q2, which is April, May, and June, was the bottom, a 5% decline in corporate earnings. But they're saying that next quarter, so Q3, which is July, August, and September, it is expected that corporate profits will go up by 0.2%. And for Q4, so they're saying that Q4 is going to be explosive growth. The expectation is corporate profits will go up by 7.4%. However, I want to point this out to you because it's the same old story. Take a look. So over the past 7 months, here are the Q3 and Q4 corporate profit expectations. So Q3 expectations, that's the bottom line, and Q4 expectations, that's the top line. Each month, so take a look at this. Look at what's happening. Analysts are revising the expectations down lower and lower as time goes on. Q3, well, those results are not going to be released for another 2 months. But by then, take a look at what's happened. Look at the trend. Expectations can flip from positive to negative. Original expectations for Q3 was positive 5% earnings growth. That has now fallen to 0.2%. So original expectations for Q4 was positive 10%. That has now fallen to 7.4%. Q4 results, they're not going to be released for about 8 months. So who knows what's going to happen to Q4 expectations over those 8 months. So I wouldn't be surprised if it turns, it could turn negative. It can go close to zero. We'll see after 8 months. Okay, so the bulls are making the case that stocks will be going higher because of two primary reasons. So the first reason is the strength of the US consumer, and the second reason is productivity gains from artificial intelligence. However, I've thoroughly covered the counterargument to these. I recently released a video on the macroeconomic environment. We are in a high interest rate environment, and the Fed is not planning on cutting interest rates until 2024. And this is creating a challenging economy. So bottom line is that Americans are struggling. Home affordability is at record lows.
You're welcome to finish the video later. That's how the market is manipulated by the Feds. They easily redefined certain terms for their convenience, as well as lowering expectations. So on paper and on statistics, it looks like the economy is awesome. Now, if you come to Clear Value, Texas, I completely trust this dude's analysis. He doesn't tell you what to do or what to buy and hold. He pretty much tells you his analysis, and then you derive your own results and your own vision off of it. So he makes an analysis that the Federal Reserve will cut interest rates, pushing the stock market up, or the market up. I recommend you guys watching this video, but I'm gonna leave it at that. So this is the greatest moment, in my opinion, not financial advice, to buy crypto. The best moment to buy crypto. The best. You buy them at their lows. Look, everything is red. Buy. Because BlackRock is going to be jumping in and it's going to blow everything. It's going to blow it up. Remember, BlackRock is multi-trillion. They're not going to be dropping 10 million, 100 million. Remember what Michael Saylor just said. They're going to be dropping billions. He might test the waters, dropping just 10 billion, see what happens, and then 50 billion, and then another 90 billion, and then 400 billion. And it's just gonna boom, boom, boom. It's gonna surprise everybody. So read the room, read between the lines, learn to know where you stand, because this is the moment. People are going to become multimillionaires off of this. Buying Bitcoin for hedge funds and big institutions such as BlackRock is tough because they have to get through a lot of red tape and regulations. But if they manage to push through the spot ETF through Coinbase sooner rather than later, sooner because it's going to happen. I don't care what anyone says, it'll happen. And it'll happen soon. So whether BlackRock is influencing the United States government to maintain and suppress prices, crypto prices below, so they can get this started, and then bam, all of the institutions will have to go through BlackRock, whoever facilitating crypto purchasing. They're geniuses, obviously. So if you cannot understand this, I'm sorry. Comment down below, what do you think? How much money do you think hbar holders are going to make this year? How much money do you think that sauce holders are going to make next year, or in 2 years, 5 years? Want to know how much I think it'll make? I think it'll reach a good 500x. Sauce will 500x, and every token that's added in their liquidity along with, depending on how heavy it is, it's gonna skyrocket. Boom! It's just gonna explode. So, what do you think? I'm showing you how the Feds manipulate the market, and I'm showing you what I'm just a conspiracy theorist, and BlackRock's behind it all. It's trying to push a spot ETF so they can grab everyone, all the institutions, crypto purchases, and they'll win. Again, this is Safe Investor AG. Edward Sensasi Warrior. Hedera will rule. Remember my videos. Remember my name. Stay saucy.